surprise move, the Bank of Canada kept interest rates unchanged amid speculations that the central bank would increase interest rates. Bank of Canada's key interest rate will remain at 0.25%, a record low that has remained unchanged since the early days of the COVID-19 pandemic. Apart from keeping the interest rates unchanged, the central bank also announced that its priority is addressing the issue of rising inflation as the economy has returned to total capacity. According to the official statement, the central bank will continue its reinvestment phase. It's expected that the consumer price index inflation will remain at 5% in the first half of this year. The reason behind this could be supply constraints and higher energy prices. As the supply crunch is expected to diminish, inflation will likely decline to 3% by the end of 2022. According to the bank, they say strong demand for goods combined with supply issues negatively impacts production and transportation, and therefore inflation rises. The coronavirus pandemic was bad for the economy and it continues to affect economic activities across sectors. Bank of Canada says that its Governing Council judges have observed that overall economic slack is absorbed. The Governing Council has decided that it will not keep the interest rate at 0.25% for too long. The central bank will most likely increase interest rates to achieve the 2% inflation target. The Bank of Canada says that the gross domestic product growth for Canada was beyond expectations in the second half of 2021. In 2022, the economy entered the year with considerable momentum. In 2021, the GDP growth was 4.5%, and the Bank of Canada expects the economy to grow by 4% this year and 3.5% in 2023. Now, if you like the information in this video, you can like, share and comment on this video. You can also subscribe to our YouTube channel, and you can press the bell icon for notifications for our latest videos. I'm Rachel, signing off for kalkinemedia.